Can I start?
I don't know. Okay.
While you're all waiting to speak as well, should any of you wish to speak, it's the black button with a white hand and a white face just below the button. It's the fourth one on the right.
Good morning, councillors and officers. Welcome to the Wales Pension Partnership Joint Governance Committee. This meeting is a multi-location meeting with the option of attending in person or remotely. There is no fire alarm today. However, should the alarm sound, it will not be a test. The meeting will adjourn and members attending physically should follow the appropriate fire exit sign. Before I proceed further, I'll ask Councillor Mike Lewis to say a few words.
Thank you very much. Good morning all. I am Councillor Mike Lewis, Chair of the City and County of Swansea Pension Fund. And on behalf of the City and County of Swansea Pension Fund and Swansea Council, I would like to offer you a warm welcome to all members of the JCG, officers, strategic partners and guests in the public gallery to the Guildhall in Swansea today for today's WPP JGC meeting. Thank you.
Just a reminder, once you've spoken, you've got to turn your mic off then. Okay? Before proceeding today, I have to remind everyone present that the proceedings of today's meetings are being filmed for live and subsequent broadcast. The images and sound recording may also be used for training purposes. Members of the public watching the meeting via the English language webcast will receive Welsh to English simultaneous translation automatically. Members and guests attending remotely can access the simultaneous translation from Welsh to English by selecting English from the interpreter button on the screen. Those attending in person should use the translation device or headset provided in the chamber. Should any remote attendees lose connection during the meeting, please make every effort to reconnect. However, the meeting will continue as long as we remain quiet. Microphone and translation unit. All members should have already checked their headphones, microphones and IT kit before the meeting commenced. Anyone who wishes to receive simultaneous translation from Welsh to English should click on the interpreter symbol at the bottom of the page and then click English. I must remind all members and officers you should only activate your microphone after I invite you to speak on an item. Please remember to mute your microphone when you have finished speaking. This will allow the proceedings to be seamlessly broadcast. Before I commence the meeting, I just need to confirm the members and officers in attendance today. I'm Councillor Elwyn Williams and I'm in the chair of the Wales Pension Trust. Joint Governance Committee. The committee members in attendance today are Councillor Ellen Hywel and welcome. Your first meeting in attendance. Diolch yn fawr. Councillor Peter Lewis, Councillor Mark Norris, Councillor Chris Weaver, Councillor Dan Rose, Councillor Nathan Yoel, Councillor Mike Lewis. The officers present today are Chris Moore, Steve Murphy, and Anthony Parnell on behalf of the Host Authority, S15 officers of the 8 pension authorities and representatives of Waystone Management UK Limited, Hymans Robinsons, Russell Investments and Robico. I'd like to welcome the members of the public who are in the public gallery, and I would like to make the following statement. The WPP recognises that environmental, social and governance ESG issues can present risks to our investments. The WPP, in line with its fiduciary duty, expects and requires all its service providers, including investment managers, to properly consider relevant ESG factors, as outlined in the responsible investment and climate change policies. This includes human rights and alleged violations of global norms, as well as environmental considerations such as climate change and biodiversity. We believe we are most effective as an investor engaging for change from within, particularly in collaboration with other like-minded investors, as opposed to campaign lobbying for change from outside. We therefore look to identify and engage organisations on all relevant ESG issues through various channels, including our membership of the Local Authority Pension Fund Forum, the engagement programme of our investment manager, and through the voting and engagement activity undertaken by WPP's voting and engagement provider, Robeco. The WPP will continue to engage on these issues with all our service providers, partners and other stakeholders, including a joint governance committee. We will continue to evolve our approach as necessary to meet the regulatory and fiduciary requirements and as necessary in the interest of our members, recognising that changes to our policy may impact our investments. We'll now move on to the agenda for today's meeting.
Hello, everybody. There's a slight interference with the sound. It appears someone in this room will be linked to the Zoom meeting probably, and they haven't muted their computer, and it's picking up, it's reverbing. So if you are linked to the Zoom meeting, can you please make sure your computer is muted to stop that feedback? And alternatively, if you've got any headsets plugged in, if you pull them out of the sockets, that might be causing the feedback on a high volume as well. So I'll walk around and just check that now.
Item 1 on the agenda, apologies have been received from Motion Richards. Item 2, declaration of personal interests. We will all have a responsibility under the Code of Conduct to verbally declare any personal interest we may have in relation to any item appearing on the agenda today. Please ensure that you clearly indicate which agenda item you have a personal interest in and the specific nature of the interest to be disclosed. You will also need to repeat your declaration of personal interest at the commencement of the relevant agenda item and indicate whether or not you will be withdrawing from the meeting during consideration of that item. Will members now please make their declaration by raising their hands?
Member of the Swansea Pension Fund.
Member of the Powys Pension Fund.
Yeah, I'm a contributor to the Greater Gwent Pension Fund.
Yeah, member of the Cardiff and Vale Pension Fund.
Okay.
I'm a member of the RCT Pension Fund, and from the statement you made, I'm also on the executive of that.
I'm I'm a member of the Gwynedd Pension Fund.
And I'm a member of the Derbyshire Pension Fund as well. Okay. Oh, sorry.
We have members on the screen.
I'm a member of Clwyd Pension Fund. Thanks.
Councillor Dan Rose.
Councillor Dan Rhodes.
I'm a member of Clwyd Pension Fund.
Your volume's not coming through very well. We caught what you said, but your volume's not coming through very well, actually.
So I'm losing my voice as well, I'm afraid.
Item 3 on the agenda, sign as correct record minutes of the meeting held on the 10th of December 2024. Page 5 of the agenda pack. Can I have a mover and seconder, please, of the minutes are a correct record?
I move, Chair.
Seconder? Yes, we see, yes. Will members please indicate by raising their hands that they're in favour? So it's unanimous. The minutes are confirmed as a true record. We'll now move on to agenda item 4, Host Authority update, page 13 of the pack. Anthony Bonello, the Host Authority, will now provide a Host Authority update.
Diolch, Cadeirydd. Thank you, Chair. Bore da pawb. Good morning, everybody. My name's Anthony Parnell. I'm the Treasury and Pension Investments Manager for Carmarthenshire County Council, and we're the Host Authority for the Wales Pension Partnership. If I could refer members to page 14 of the pack, the Host Authority update. First of all, the WPP business plan for 2024-25 was approved by the JGC on the 13th of March 2024. Quarter 3, which covers the period 1st of April to 31st of December 2024, is attached, showing WPP's progress in relation to the work plan, budget and investment section. So if you actually move to page 18 of your pack, you'll be familiar with this business plan each quarter. As usual, I won't run through in detail, but if you look at the top of page 18, the Oversight Advisor procurement process, that was completed, and we'd like to congratulate Hymans Robertson on winning that contract again. The Voter and Engagement Service Provider procurement process was also completed. I would like to thank and congratulate Rubico on winning that contract once again. Then we go on to ongoing sub-fund development. You can see that most of them are ongoing. The real estate programme is continuing with the legals at the moment, so we don't anticipate any investments in that programme till later on this financial year. The operator services, the operator and sub-fund governance oversight, that's currently in operation, ongoing. The investments and reporting, the Task Force on Climate-related Financial Disclosures report, that's coming to this particular committee later on. And then the annual performance review sub-funds, that was completed, going to be completed by the end of this month. Moving on to communication and training, the annual training plan is going to this particular committee, and the WP's annual report was published in December 2024. Resources, budget and fees, the annual review of resources and capacity, that's reviewed when formulating the budget, and the annual WPP budget formulated and included in the business plan. If I look at the training plan then, which is on page 21 of your pack, you can see there we've held a regular training plan, training events during the year, which have all been completed. And then we've got a couple then at the bottom of that table scheduled for the 24th of March this month. I hope you agree that the training is still relevant, and I'd like to thank everybody for the attendance online, which is really great. We're really grateful for. The budget then is on page 22 of your pack. I'd just like to highlight that on the budget, you can see there's a new line in there called Project Snowdon. This is in response to the Fit for Purpose consultation, which the government put out. So you can see there, there are costs for this financial year 24-25 of 421, which is ongoing now. The majority of those costs are being done by the host authority, the external advisors and the constituent authorities. So we'll come on to the project Snow in a bit more detail later on when Jeff Dong from City and County of Swansea presents the proposal we put forward to government. Then you'll be familiar with the sub-funds that we've launched on page 23. And that's the end of that particular business. I'm happy to take any questions on that before I move on. Okay, thank you, Joe. So moving on, go back to page 14 of your pack. Work has continued to be developed in a number of key areas, including, as I just said, the fit for purpose consultation. We actually submitted that on the 16th of January 2025. We've done a business case since, which, as I said earlier, we provide in item 11 of the pack. The training plan and the business plan, just been through the business plan there for review, and the new business plan is going to be in item 6. Policy reviews, governance matrix, no material changes to that. That's my bit at the moment for the host authority, but I'd like to welcome Rachel Barrack from Hymans now, who is a responsible investment expert within Hymans, and she'll take you through a few of the other items specific to responsible investment before I continue. Thank you.
Diolch. So just a couple of updates in terms of RI, responsible investment. First on the TCFD report, WPP conducted its first report in line with the Task Force on Climate-Related Financial Disclosures, covering the period to end March 2024. Just to note, this has yet to become a regulatory requirement for the LGPS, but WPP has committed to completing a climate report going forward on an annual basis. In your pack, the full report can be found on page 25, and it'll be published on the WPP website following this meeting. I won't go through the whole report, but positively, we can generally see an overall trend downwards in both WACC and total emissions. And we also highlight a number of future areas of focus for the pool, including on both the evolution of current investments as well as the launch of new funds. On that point, one of the focus areas we had identified to progress over this year is on the sustainable evolution of the fixed income sub-funds generally, and WPP is currently working with Russell IM on progressing this. Next is on the passive mandates. As you all know, WPP had already opted to move part of its passive equity allocations into a low carbon solution, but we wanted to explore other options for evolving that further. So with WPP being the sole investor, meaning more control around ESG and climate considerations that would be applied on the fund, as well as retaining control over voting, and work is ongoing on this. Next, one of the recommendations that came out of the All Wales Climate Report from last year was in building a list of companies that can be more readily scrutinised from a climate perspective. So such a list will help focus our efforts in terms of engagement and voting, as well as monitoring and reporting of those efforts, really just to create a point of focus for future discussions with stakeholders. The list currently covers 44 issuers, with each monitoring report covering 11 issuers on a quarterly basis. The climate framework is also something that came out of the All Wales Climate Report, the primary purpose of which is just to ensure consistency in terms of language, communication, policy setting and reporting across WPP, which has been presented to the Responsible Investment Working Group. And the framework is really underpinned by 4 core pillars in terms of climate. So principles and beliefs, goals, strategic goals, portfolio characteristics, so things like metrics that we'll report on, and then stewardship, so voting and engagement. In terms of stewardship, we just want to note that WPP has now received confirmation that we remain a signatory to the UK Stewardship Code. And on page 49 of your pack, you'll see a general snapshot of some of the work WPPs completed over 2023 and 2024, which includes, as I just mentioned, the publication of the first All Wales Climate Report, and then the first analysis on WPP's deforestation exposure. Thank you.
Are there any questions for Rachel?
Yeah, thanks, Chair. Not so much a question really, but just to recognise, I think the real value of that TCFD report. I thought it was really clear, really succinct, and actually set it out in a very accessible way. So I'm really pleased that we've published that and we'll be doing so annually. I thought it was yeah, a good piece of work.
Any other questions? And back to Anthony.
So the next steps, priorities for the WVP, as I just mentioned earlier, Project Snowdon will be ongoing during the year. We will be launching the real estate investment programmes. We'll be completing the 2024-25 year-end closure of accounts within the statutory timeline and the annual return, formulate the annual update and annual report. And then the legal services provider procurement process, that started. As you know, Burgess Salmon, our current provider, and we'll be going through the tender process in the next few months for that. On the top of page 15 then, you can see the update that we provide in the table for the pooled assets. These are as at the 31st of December 2024, and you can see there they've increased from 18.5 billion to nigh on 20 billion. The 20 billion makes up about approximately 80% of the total assets of the 8 Welsh funds. So it's pleasing to note that the pooling is increasing, and we do keep government informed of the pooling progress and how much we have pooled so far. It's in line and with most of the other pools, and we're doing very well, pleased with that. The forthcoming JGC meeting dates are set out there for you. I won't go through them in detail. You can see that we hold 2 online and 2 hybrid. We do still engage the pension board chairs, the 8 pension board chairs in Wales. The next meeting for that is the 30th of April 2024. And as I said, the training sessions continue, the next ones in 24th of March. And the website is updated regularly with relevant news and publications. That's all I wanted to say on that item, Chair. Please take any further questions.
Are there any questions for Anthony?
None online.
Okay. Would someone please move that we receive the report? Yeah, moved. Seconded. Will members please indicate by raising their hands if they are in favour? Yeah. So I think that's unanimous. The report is received. We will now move on to agenda item 5, WPP Training Plan 2025-26, page 51 of the agenda pack. Anthony Panel of the host authority will now present the 25-26 training plan.
Diolch, Cadeirydd. So on page 52, in the middle of that page, a training requirements questionnaire was issued to all the Officers Working Group and Joint Governance Committee members in December 2024, and the responses from the completed questionnaires have been assessed in the preparation of the 25-26 WPP training plan. The training plan is devised to supplement existing constituent authority training, so you will find that each of your committees and your officers should be providing training on top of this, as well as this, I should say, from the WPP. The training is primarily focused on meeting the training requirements of the members. However, it may be extended to pension committee members as well as pension board representatives. The 2025-26 training sessions will still be held quarterly and will cover project knowledge, stewardship, responsible investment, pooling consultation and regulatory requirements. That's all I need to say on that starting point, Chair. And then the detail of the training plan then, 25-26 is on page 50, starts page 55. Again, you'll be familiar with this, so I won't read it verbatim. And then the topics we're going to cover, which are on page 56, include private credit infrastructure asset classes, local impact investments with private market asset classes, then voting engagement and stewardship code, responsible investment, which will be focused on the biodiversity, natural capital, climate scenarios and fiduciary duty, and then pooling consultation and regulatory requirements to finish the financial year. Happy to take any questions, Chair.
Any questions? Yes.
Thank you, Chair. It's just a question that obviously, should we do the pooling consultation and the regulatory guidance a bit sooner than Q4? Because by that point, we'll be slap bang into the new arrangements. So whether it might make sense bringing it forward so we can get our heads around it instead of running straight into it.
Thanks, Councillor Howard. Yeah, the order of this can be dynamic, so we could move it. What we'll do is we'll keep updating you regularly on where we are with the consultation and then regulatory. But if we feel we need to move it forward, yeah, we can do that as well. Happy to note that. Thank you.
Chris, do you want to come in? Chris? Okay. Would someone please move that we receive the report? Okay. Will members please indicate by raising their hands that they are in favour? Unanimous? Unanimous. Training plan is approved. We'll now move on to agenda item 6, WPP Business Plan 2025 to 2028. Page 57 of the agenda pack. And Tim Pennell of the host authority will present the business plan.
So WP Business Plan has been drafted for 2025-28 and is to be approved today by the Joint Governance Committee in accordance with Section 6 of the Inter-Authority Agreement. Following approval by the Joint Governance Committee, the business plan should be sent to all constituent authorities for their written approval. So the purpose of the report is to explain the background and governance structure of the WPP, outline the priorities and objectives over the next 3 years, introduce the WPP's policies and plans, outline the financial budget for the relevant business plan period, and summarise WPP's investments and performance objectives. It's constantly been monitored and formally reviewed and agreed annually. So the business plan itself is starts at page 62, the contents page of the pack, then the introduction and about WPP. That has changed slightly. So if you look at the middle of the page, just above where it features the 8 LGPS funds, we put there in response to the Fit for the Future consultation announced in November 2024, WPP has established a project to explore and implement the governance and business requirements for WPP to conform with the government guidelines. This project is known as Project Snowdon, which I mentioned earlier. And a lot of time and effort is going into the work for Project Snowdon by all the officers of the 8 constituent authorities and our partners, and we keep engaging regularly with the Joint Governance Committee on progress. So I'd like to thank everybody for the work they're doing on this project. The next few pages are, as they are usually, the governance structure and the communications and the risk management piece, and the objectives of the pool. The beliefs are noted there on page 68 of your pack, and the policies then on page 69. You can see on page 69 just a reminder of the number of policies we do have for the Wales Pension Partnership and how we continually monitor and updating them when required. The work plan then, that's on page 70 of your pack, and the work to be completed, as I mentioned earlier, the legal services this financial year come in, delivery of Project Snowdon, the annual review policies, risk register quarterly reviews, respond to pooling related consultations, and the ongoing investment programmes there and developments. You'll see then there that most of the items there are done annually, accounted for annually, which shows our regular monitoring of all the policies and papers. And then the training plan, which I won't repeat on the next page. And then the budget then. So you can see in the budget, you've got the Project Snowdon preparatory work. I mentioned the 420 thousand for this financial year. Then that goes up to 1.2 million currently for 25-26. And the reason why it's to be confirmed for the following 2 years will depend how we progress with Project Snowdon and what the government expectations are. We keep government informed regularly of progress. We meet them every couple of weeks. And we've also been meeting with the Financial Conduct Authority on the potential application into them. So, as I said, there's a lot of work going on this Project Snowdon, and you can see the budget for it there. Then you've got the operator services and allocated budgets then. You've got the sub-funds. So the sub-funds are set out in a bit more detail on the annual business plan. So you can see we've got the global growth, which I'd just like to remind you has now moved over to management of Bristol Investments from Waystone. Got the global opportunities fund, the UK opportunities, emerging markets, sustainable active equity. Those are the equity funds. Then you've got the fixed income funds on the next page, on the private markets, investment programs at the bottom of page 75. Have we taken any questions, Chair? Diolch yn fawr.
Any questions for Anthony? Mark, Chris. Right. Would members please indicate by raising their hands whether they're in favour? Unanimous? Yes, unanimous. We'll now move on to agenda item 7, Risk Registers Quarter 1 2025 review. Page 77 of the agenda pack. Andrew Johnson of Hyman Robertson will now present the amendments to the risk registers.
Thank you, Chair. So this quarter's risk review focused on the first half of WPP's governance and regulation risks, G1 to G7. And the main headlines are that there were no material changes to the risks that were reviewed over the quarter. All remain on track, and that's summarised on page 81. The risk reviews covered areas such as failure to comply with relevant guidance, decision-making and advice, adherence to budget, record-keeping, filing of accounts, and management of conflicts. On page 82, there was one out-of-cycle risk which was discussed relating to the ongoing developments in relation to the consultation. And as Anthony mentioned, Jeff's going to be providing an update on the business case shortly. So the narrative was updated purely to reflect the current status with regard to that activity. It is still above target, but primarily because it's a live event rather than any particular concern, but it remains unchanged. Next quarter, we'll finish off the remaining governance and regulatory risks for discussion, but yeah, brief update this quarter and happy to take any questions.
Are there any questions? No. Okay. Would someone please approve the amendments to the WP risk register? Yeah, proposed and seconded. Will indicate by raising their hand if they're in favour. Unanimous? Yeah, it passed. Unanimous. Report is approved. We'll now move on to agenda item 8, operator update, quarter 4 2024 review, page 87 of the agenda pack. James Zylander of Waste Management will present the operator report, as will Carl Middle, who is online.
Thank you, Chair. I'm not sure if Carl's joined in. I know he's about to, so I'm not sure if he's in the lobby or anything. Just to check before I move on. Oh, it's coming now. Thank you. Thank you. I'll hand over to Carl to give the corporate update from Waystone. Thank you.
Good morning, everybody. Yeah, so just a quick update from myself before I hand back over to.
We can't hear you, Carl, at the moment.
Oh, can you not? Apologies. Sorry, bear with me. Can you hear me now?
No, I don't know whether it's our end or your end.
I can hear fine
Can you help you?
online, so it must be in the chamber.
Oh, can you hear me?
Trev,
Can you just speak on the system on Zoom for a moment, please? See if we can hear you. Caroline, can you try and speak?
I can hear you online.
Who else is in the meeting? Can anybody on remotely attending try and speak for a moment?
Dan, would you try and speak?
We could hear everything that's been said online perfectly fine.
Dropped out altogether, but look at it.
Give me a moment. I'm going to go and see the tech boys next door. Sorry about this.
Chair, if it's okay, I'll carry on with the operator update and hopefully they get it resolved, and then Carl can do the corporate update at the end, if that's okay.
Yes, that's fine.
Thank you. So yeah, on page 94 of the pack is a compliance update where we as operator look at anything that is particularly on the LGPS, obviously for your South Wales, and we do look after another pool as well. So there's key items from this section that we work with the FCA very closely with as well. And I've also added in there some of the key Mansion House speech that was earlier a few months ago as well. So there's just a few points on there just for notice as well. But again, we keep this updated regularly and keep the host up to date on any compliance or FCA regulated items that come up that has an impact on the LGPS and yourselves. Moving over is the relationship overview. Just gives you kind of a brief snapshot of all the funds under the equities fixed income, when the contract started, and obviously with the new contracts being signed last year as well, and obviously when that runs to, and the tenure of the relationship. We then move on to page 96, which gives you the sub-fund values. These are all at the end of the December 24. And as the host said earlier, total is just now over 13.4 billion, which is an increase from the last quarter as well. So that's good to see. We now move on to page 97. It's slightly different where under the sub-fund values and percentage ownership, you can see now we've slightly changed this slide from previous. It now includes the percentages underneath each constituent authority's values in those funds as well. Just makes it a little bit cleaner and nicer to visualize that as well. So you can see exactly what you're holding as at the 31st December as well. The next slide is a fund snapshot, which is the equities. Again, it's just similar to the page before, but again, just breaks it down a little bit clearer as well. It gives you an idea visually how all the constituent authorities are invested and what percentage you own. Just to kind of pinpoint, the Sustainable Active Equity Fund is owned by all of you by a fair split across the 8. And it's the same again on the fund snapshot for the fixed income side as well. So just that visual of how the ownership is portrayed there. Moving on to page 100, it's our initiatives page. And as we said earlier, the Global Growth Fund, we completed that transition in November to Russell Investment. We've had that since inception. And again, the rationale behind that was all explained previous JGC and approved. Again, all the new agreements were agreed and effective that were signed last year that came into effect on the 23rd of December. And as said earlier, Project Snowdon now has a number of work streams that's been created. We're also working with Russell Investments on a number of different changes to the sub-funds, mainly around about sub-manager changes. The first one was on the Global Credit Fund, where we're removing Western, which happened last year as well, and replacing that with Coolabah. We did say on the update, the last bit was expected approval February 25. That approval came through from the depository around that time, and we're looking at a live date in the coming weeks. The Same on the absolute return bond fund. Again, change manager, removing Insights and replacing that with Oaktree and DCNA. Again, we put those together with the Northern Trust Depository. They approved all that at the same point in time. And again, Oaktree and DCNA are again to go live in the coming weeks as well within the portfolio. And then on page 11, the last one on the change is the emerging markets. Again, looking to add additional SANS capital to that. That was only approved only recently by the WPP. And again, that'll be moving through our governance and then on to depository for approval as well. I'll just stop there if there's any questions, Chair, on anything I've said so far.
Are there any questions? No.
Okay, thank you. Moving on page 102 of the pack, is just the market update and the current climate with Russia, Ukraine and Middle East. So again, we just monitor those and just like I said, Russia's no holdings in that, and then Middle East very little now as well. On page 103 is the oversight of our third-party monitoring. So our oversight in terms of Northern Trust, who act as our transfer agency, fund admin, and they will literally, we would go.
That's coming through now. Sorry, James. Carl, can you confirm that you can speak now?
Can you hear me?
Yeah, that's fine.
Yeah.
Are you happy James continues coming at the end?
Yeah,
or do you want
absolutely.
to
Yeah,
say-
that's fine.
Okay.
Thank you.
Okay, thanks.
Thank you. Yeah. So just to reiterate, yeah. So with the oversight is the table of what we're looking to do and what we've done at the end of Q4 24, and we also did a due diligence on Russell Investment. That was in February last month as well. So output of that will come in due course as well. On page 104 now, we actually have got the plan as well for 25. That took us up to the end of 24. And in 25, what we're expected to do either on site or via a questionnaire that we get the companies to complete for us. And if there is need to go in and see them, we will do based on those results as well. But you can see on there what we're looking at: transfer agency, fund administration. We do a pricing analysis, and again, then there's IT questionnaires, other annual due diligences to do as well. And as I mentioned, the last one on there is the due diligence we did on Russell Investments at the beginning of February. Page 105 is the engagement. Again, all the dates in there from the OWG, JGCs, any pension committee meetings that we're planning on going to as well. And then on page 106 is a meeting schedule, who attends the meetings from the WPP as well as Waystone. And we've recently had a exec meeting in the beginning of this year in January where Carl and Rachel Wheeler attended that with the host and a few of the officers and councillors as well. And then throughout the rest of the year, it's just the JGC, OWGs as well. And that's continued on page 107. What we've added to this is an appendix of the Waystone Group. I thought it'd be quite useful for those that are either new to the WPP and to the constituent authorities, that just gives you a bit of history about who Waystone are. I just thought it'd be quite nice for people to see, and also just re-emphasises how the amount of work and the amount of people that work for Waystone, what we do, where we do it, our business and things like that. So again, like I said, it's over a year now since we were acquired by them, but anyone who's joined that, you're more than welcome to share that with your wider constituents as well. So I'll pause there, take any other questions, and I'll hand over to Carl. So thank you.
Are there any questions?
Sorry, can I just confirm, did Carl want to come in and say anything before you conclude?
No, we should after questions.
All right. Yeah.
Yeah.
Thanks, Chair. I just wanted to thank James and obviously Waystone for in the market updates. We asked for information on our holdings within, for people in the gallery, our holdings within companies connected with Israel. In the Middle East, it's got a list of where we hold those funds. And obviously, it is something we are currently discussing in other meetings, and will do later this afternoon as well.
Ask Carl Middle to come in.
Okay, can I just double check you can still hear me now then? Can you hear me?
Yes, yes.
Yeah, sorry. Okay. Good morning, all. Thanks, James, for just giving the broader overview. So what I wanted to do was just give you a bit more of a corporate update and just update you on some of the things that are going on at Waystone and probably more broadly in the industry as well. Firstly, apologies for not being there in person today. I'd wanted to be, but actually it clashed with an investment association CEO breakfast panel this morning, which I wanted to make sure I was at in person, because obviously there's a lot going on in the industry. One of the core topics there is obviously around the government's consultation on pension reform, and a number of the LGPS pools are actually represented directly at the investment association. So I wanted to make sure that we are there representing yourselves as well as you're not direct members of the investment association. So look, I think just on that, there's clearly a lot going on, and we're working with you in relation to the government's consultation and where that takes WPP as a pool, and we'll continue to work very closely with you on that, as well as feeding back more broadly in relation to what we're hearing and seeing through the likes of the Investment Association and so forth. Just a couple of other topics there, and we will feed back more directly through Anthony and Chris and so forth. But there's some other things that are going on in the industry at the moment. There's some challenges from HMRC around VAT exemptions, etc., which we need to keep you updated on, and so on. So, it's really important that we continue to represent you through those industry associations. More closer to home, Waystone Management UK, so the operator to WPP, now oversees in excess of 100 billion of assets under management now. That's working with around about 80 investment managers, comprising over 236 funds. So continuing to really grow as business, although obviously we've got quite a bit of market turmoil at the moment, but more broadly across our independent ACD and management company in Ireland and Luxembourg now. The scale of the business is in excess of 330 billion of assets under management. So that really does allow us to operate at a level and have that real depth of experience to continue to support the pool. I think also a couple of important staffing updates. So more recently, Waystone as a whole appointed Pervez Pandrani as Chief Product Officer. Pervez joined us in December and is part of the Waystone executive leadership team. In fact, as country head, I now report into Pervez. So that's bringing together each of the country heads into a single reporting line into the Waystone group. Pervez has joined us with over 30 years of experience in investor services and banking. Most of his career has been at Citibank, where he's led on some of the product offerings around ETFs, middle office, transfer agency, fund accounting, depository services. So real depth of experience across the funds industry in a number of domiciles as well. So will really lead to different lines of thought, etc., coming into the business. So really looking forward to working directly with Pervez as we take the business forward and continue to support you. More importantly, as somebody that you'll recognise has a lot of interaction with yourselves and also the appointed managers in Russell and so forth. So Peter Ritchie, who's been our acting CIO during 2024, has done an outstanding job over the last 12 to 18 months. And as such, Peter was approved to move to our formal Chief Investment Officer with effect from the 1st of January. So that's gone through all of our board approvals and so forth as well. So pleased to have Peter in that formal role, and it continues to work very closely with yourselves and Russell. So that was my update, Chair, unless anybody's got any questions.
Are there any questions? No. Will someone please move that we note the report? Yeah, it's been moved and seconded. Will members please indicate by raising their hand that they're in favour? Unanimous? Unanimous? We will now move on to agenda item 9, performance report as at 31st December 2024. Page 117 of the agenda pack. Adrian Quinn of Russell Investments will now present the performance report.
Good morning, everyone. Borodar. We start on page 121 of your packs, and we start with the usual market charts. So light blue there are the growth assets, including equities. Orange are the fixed income markets, and dark blue are the currency markets. The big story in Q4 2024 was the US presidential election. There was certainly a honeymoon period with positivity flowing through markets, fueled by the hope that Trump's policies, including tax cuts, would be positive for US businesses. We've seen some of that derail somewhat this quarter, but for Q4 at least, that capped off another strong year for US equities. And given the weight of US in global markets, that meant a return of nearly 20% for the all-country world benchmark. On the flip side, the Trump victory was a headwind for emerging market equities. The blue bar furthest to the left, you see there with the impact of tariffs expected to hit countries like China and Mexico quite hard, but also other countries that have been helping with the flow of Chinese trade more directly into the US as well. That said, it was by no means a bad year for EM, as you can see in the one-year chart, the second chart, up over 9%. European and UK equities struggled, impacted by a weaker economic outlook and political uncertainty in parts of Europe, such as Germany and France. In terms of fixed income markets, again in orange, there was a fair bit of volatility this quarter. Broadly, we saw yields rising as the declining trend in inflation started to flatten off, with more caution over the future path of interest rates from various central banks. In terms of currencies, the only game in town was the US dollar, driven really by that US economy strength and also the Federal Reserve's more cautious stance on lowering interest rates, and a view that Trump's policies were likely to be more inflationary in nature. And all of those factors combined stoked quite a strong rally in the dollar, up over 7% versus sterling. If we move on to the equity sub-funds, starting on page 122, the big story was the continuation of the theme that we've seen for some time now, with half of the market returns in 2024 coming from just 8 stocks. Previously, we've talked about the Magnificent Seven. Some market participants have adjusted this now to Batman, to include Broadcom, another fast-moving semiconductor name. It meant, however, a difficult quarter again for any actively managed sub-funds, given that narrow leadership. The median manager underperformed by around 2.5% for the quarter, depending on which peer universe you use, and down over 6% for the 1 year. So that's the less good news. Sorry, I've just lost my... So that's the less good news, and there will be difficult years for actively managed sub-funds. But the good news is that all 3 global equity sub-funds have held up pretty well. Global Opportunities down closer to 0.6% for the quarter, 1.4% for the year. Global Growth was down a bit less for the quarter, but a bit more for the 1 year. But again, both of those sub-funds certainly better than the median manager. The Sustainable Active Equity sub-fund had a similar experience, albeit that sub-fund has slightly less exposure to that group of Magnificent Seven or Batman stocks, so was down a little bit more than the median for the quarter, but again, significantly better over the 1 year. And if you also look more specifically at the universe of sustainable strategies, it was well ahead of peers and well ahead of the median manager. Looking forwards, if you look at the market's expectations for annual earnings growth, you can see that 2023 and 2024 had earnings growth of over 30% for the Magnificent Seven versus flat growth for the wider market. If you look forwards, expectations for 25-26, the market is suggesting a significant broadening of earnings per share for companies, with the Magnificent Seven growth more than halving, albeit still growing, and the other companies in the wider market expected to grow nearer 10% this year and 13% in 2026. That would certainly pave the way for a much better environment for active strategies, and we've certainly seen all of the sub-funds performing strongly year to date. Moving on to the regional sub-funds, emerging markets and UK on page 124, both had a positive quarter, beating their respective benchmarks, and over the 1 year beating the benchmark too. In absolute terms, whilst not as strong as the US, both sub-funds were up around 10%, so a strong period for equity returns overall. In terms of emerging markets, the US election result was a significant headwind, specifically in Q4, given the potential impact of those tariffs, as well as the stronger US dollar. But despite that, China, obviously a key market in EM, outperformed on the back of increased government stimulus. India underperformed, where many managers are underweight, given how expensive that market has become. We've seen those trends continue year to date in 2025. Some of you might have heard about DeepSeek, which is a Chinese AI startup that released its advanced AI models that rival industry leaders in the US, but at a fraction of the cost. That's caused quite a stir in markets, and we've seen a repricing of some of the AI stocks in the US, but we've also therefore seen other markets like the Chinese market, the Chinese tech market in particular, narrow the gap, and we've seen a more broad-based rally. For example, the Chinese market is up 18% year to date. Moving on to page 125, I mentioned that UK equities did well over the 1 year, but the market performance was fairly muted for the fourth quarter. Inflation expectations in the UK were revised upwards, and that was a dampener overall for the market, with the Bank of England taking a more cautious stance over the pace of interest rate cuts. Despite that, the sub-fund outperformed its benchmark by 60 basis points in Q4, with a majority of the managers outperforming, in particular Lion Trust and Baillie Gifford, performing strongly given positive stock selection. And that was despite generally large caps outperforming smaller and mid-cap companies where active managers tend to operate. Moving on to fixed income on page 126. As I mentioned earlier, it was a challenging quarter for global fixed income markets. In general, government bond yields sold off. Credit performed a little bit better. Credit spreads narrowed on the back of the more positive earnings data, following that positive equity sentiment that I talked about earlier, but net a volatile quarter. If you look at the performance of all of the sub-funds with interest rate sensitivity, so that's global bonds, global government bonds, global credit, multi-asset credit, and sterling credit, all had negative absolute performance over the quarter. The only fixed income sub-fund with positive absolute performance was the absolute return bond fund, which, as you'll know, seeks to be more neutral to wider changes in interest rates and credit spreads. Indeed, the managers are actively trying to exploit interest rate, credit, and currency volatility, whichever direction that is going in. More specifically, in terms of the Global Government Bond Fund, this struggled also in relative terms. Both of the managers underperformed, but especially Colchester, with some of their calls not working out over the quarter in terms of their yen positioning, overweight in Mexico and Colombia, which were hit quite hard by the incoming Trump tariff policies. But longer term performance for this sub-fund remains strong, and we've certainly actually seen a lot of mean reversion year to date in 2025. In terms of global credit, whilst down sort of 1.4% in absolute terms, it was a more pleasing outcome from an excess return standpoint, up 20 basis points versus the benchmark. In aggregate, the managers have been overweight towards European credit, given the more favourable spreads on offer versus the US, and we saw spreads continue to tighten in most of Europe versus the US. A new manager is going to be added this coming quarter to the sub-fund, which we think should add some further diversification, but also we think add something from an excess return standpoint. In terms of multi-asset credit, moving on to page 127, as I said earlier, it was a negative quarter with absolute performance behind the cash plus target. Now, whilst not as sensitive to interest rates, there is some interest rate sensitivity in certain sub-asset classes of the multi-asset credit universe. High yield, for example, was down, emerging market debt was down, and although certain areas like asset-backed securities did okay in absolute returns, the performance was still behind the cash plus target. The only sub-asset class really capable of meeting the cash plus target was bank loans in particular, given the floating rate nature of that sub-asset class. The managers who are employed on your behalf, who sort of play a role in these sub-asset classes, actually did okay. ICG in loans outperformed, Voya, RBC Blue Bay outperforming. But as I say, it was a tough quarter versus a cash plus benchmark, and that's also impacted the one-year figures you see here, which previously had been tracking in line with. On the flip side, I mentioned the absolute return bond fund being a little bit more immune to the wider fixed income volatility. The strategies performed really well. We saw positive absolute returns of 2.9%, well ahead of the cash plus target. A lot of that was driven by short duration positions in the UK, US and Japan, i.e. managers were positioned to benefit from interest rates rising. And overall, it was a strong year for the absolute return bond fund, returning 8.7% compared to the target returning 7.4%. So this subfund is very close now to reaching its target since inception, which is pleasing. And there are a couple of changes on the way designed to bridge that gap to the target and to keep us there over time. Last but not least, in terms of sterling credit, the subfund was down 70 basis points in absolute terms, given the increase in interest rates that I talked about earlier. But offsetting that somewhat was that UK credit was the best performer in terms of credit spread tightening in Q4. The manager in this subfund, Fidelity, underperformed their benchmark for the quarter. Their overweight to financials was positive, but an underweight to technology and communication services detracted overall from performance. But on the more positive side, the subfund was slightly outperforming over the 1 year. And as you can see there, the manager has been doing a very good job since inception in relative terms compared to the benchmark. I will close there and open for any questions.
Are there any questions for Adrian Quinn? No, it doesn't look. Yes, sorry, to start with Mark first. And
Thanks, Chair. Yeah, not a question really, a comment on obviously the state of politics at the moment is going to make it very volatile wherever we're invested, because the tariff war, as you say, with President Trump is going to have the other countries retaliating. So the markets are going to go up and down wherever we invested, but it's a good thing really that we're a long-term investor and we look on the far horizons over a 40-year or more spread. So just to reassure people that, you know, short-term volatility doesn't hugely affect the long-term focus for pension funds.
Yeah, thanks, Chair. I was partly going to make a similar point and just check that there's confidence from Russell that the underlying managers are are being very nimble and flexible as we go through this period of extreme uncertainty with sort of Trump's sort of erratic behaviour and the effect that's having on the US markets. I mean, it is very uncertain to know where this will be in the long term, and as Mark makes a very clear point, pension investment is over the long term. You do not have to worry as much about that short-term volatility necessarily, but just to check the confidence you have with the discussions you're having with the underlying managers about their preparation for what is a very uncertain year ahead.
Thank you. So I would echo those comments, in particular the comments from Councillor Norris. But yes, the managers are obviously active managers, and part of their role is to ensure that they are cognizant of market volatility and geopolitics. But in general terms, they tend to try and look through some of that volatility looking longer term and trying to obviously focus on the fundamentals of the companies that they own. Thank you.
Would someone please move that we note the report? Moved, seconded. Members indicate by raising their hand if they're in favour. Unanimous, I think. Thank you. The report is noted. We'll now move on to agenda item 10. Private market update, private credit. Page 153 of the agenda pack. Adrian Quinn and Keith Brickell of Russell Investors will present the private credit report.
Thank you, Chair, and good morning. I'll provide a bit of an update on the success of the start of Vintage 1 of the private credit portfolio, as well as an update on the outlook for what's going on within the private credit market, and then we can review the plans for Vintage 2. But first, I'll provide a bit of a definition of what private credit is, since it is a newer asset class to the WPP pension plan. Private credit tends to refer to the lending to small and medium-sized businesses, what are typically direct loans, one-to-one between the private credit manager and the underlying business. It can equally also at times refer to distressed or rescue finance in times of more stress, albeit we're seeing less of that today. Now, with respect to Vintage 1, which has gotten off to a good start, we've had commitments from 7 of the underlying authorities, just under $700 million, pounds. And the net target of 8 to 11% in terms of IRR is something that we are on track for as we look at the investments that we've made thus far within Vintage 1. Keep in mind this vintage started April 1 of 2023, so we are still just under 2 years of total investing within this. So it is early days within the context of a private markets portfolio to be discussing too much with respect to performance, but I will provide a bit of an update on that front. I think more importantly, as we step down to page 5, is to look at deployment at this stage in the process. We have deployed just over £300 million of the just under 700 million that was committed overall. This is what's been drawn out of your accounts. However, there is an additional 50 million that has been invested since the time of the last draw late last year, which will be called a little bit later in this year, probably in the second quarter, as we continue to build up and make further investments. But what is important to recognize is with respect to the pacing of deployment is as you look forward, we will continue to be in drawdown mode or net investment mode throughout the course of 2025. But as we move into 2026, because private credit does return capital faster than many of the other private markets due to refinancing and the high income nature of debt investing, you will start to most likely see in 2026 that you'll see net distributions back to you versus the contributions that you've been making. So that it sort of emphasizes as we come to Vintage 2 and future vintages, the need to kind of continuously commit to maintain the exposure, whatever your desired exposure is within the asset class. Now, stepping down to look at how is the portfolio tracking and what is it looking like today from a geographic exposure standpoint, it's about 65% European, with 21% of that being in the UK marketplace. I will say relative to the broad market for private credit, which is about a 75-25, maybe an 80-20 type of mix between North America and European marketplaces. We are obviously more tilted toward the European marketplace. We've seen better value over here on this side of the Atlantic than in the US for direct lending due to a variety of dynamics, which I'll discuss in the market outlook. Now, in terms of the actual investments themselves, we have put about 15% of the portfolio into what are direct sustainable impact strategies for funding sort of net zero type of initiatives, as well as structuring a 5% allocation to a dedicated local allocation. This is in partnership with Pluto on the real estate debt side of things, where they have created a custom sub-fund that invests solely in Wales within the portfolio on your behalf. Otherwise, with respect to the individual investments, as we go down, a number of them have already had significant deployment and are now starting to return back capital. While these expected return ranges are still very early days, I do think we are on track to meet, if not exceed, the desired performance target within this. Some of them are more, call it, baked than others because they have invested more. So managers such as a Lombard ODA or an HIG Bayside that have already kind of realized many of these returns, I think are more certain in terms of their return impact. Others, it's still very much early days, but we are on track thus far. Just to give you a flavor of some of the types of investments in the portfolio, as a case study, there is one private hire car service here based out of Cardiff that was an investment, or continues to be an investment in the portfolio. And what I would highlight here is the relative value, as this is a pretty standard deal within the context of the direct lending market. But the SONIA plus 6.75% coupon for this type of deal, if I was to do it on the US side of the Atlantic, you're probably looking at more SOFR plus 5% type of number. So the value for the relative risk in the deal has been better, and this is a case study example of that. And then just as an example of what we've been doing on the sustainable impact side, one of the investments within Lombard ODA's portfolio is a community solar program. This allows multifamily homes to access solar power, which is usually a more difficult thing to do given the coordination problem, as well as it funds the initial startup costs, which makes it more accessible on an affordable basis for more types of households. This is a classic example of how Lombard ODA operates, a company that already had kind of a proof of concept. So you're not talking about a venture debt investment, but they needed to gain scale to improve profitability. Lombard ODA provided that debt investment. It's one that is now in the process of being realized within our portfolios and has paid off at nearly a mid-teens or in a mid-teens type of IRR profile. That's the update with respect to Vintage One. With that, I'll move on and talk about the market update and the environment. So there has been a lot of discussion about private credit. It has become a very hot asset class, certainly in the news media, but there's been many discussions about whether or not it's become too hot, whether or not too much lending is taking place. I did want to put into context, when you look at the growth in private credit in isolation, yes, it does look like a high level of growth, but relative to the total market for credit and the extension of credit that's been going on, it's really been a pace with the rest of the market. And what has been taking place is that the private credit within leveraged finance has just been taking market share out of the liquid tradable markets rather than an explosion in total credit overall that would cause more or cause greater macro concern from my perspective. Now, there are pockets of the market that have been more overheated and now represent less relative value from our perspective. So when we look onto the next page at where fundraising has been the most successful, it has been quite concentrated in the largest funds that are out there. That has driven down the relative value in many of those in the types of investments that the largest funds are likely to make, which has tended to be in the US large market buyout space where you provide that financing. As a result, we see less relative value in that space and are typically, and as you have seen within Vintage One, we have provided less lending to that space and provided more over to the European marketplace where this dynamic has just been lesser. Now, when we look at what's coming to market as we start to look forward, we've seen more and more strategies coming out that are not those direct lending strategies, but rather what we would call specialty finance or opportunistic. This can be asset-based type of loans where you're lending against a specific asset of a company. It can be against royalties, perhaps of a biotech company that has already created a pharmaceutical product or a medical device. And we're seeing more of that type of lending come to market. It hasn't been as successful from a fundraise standpoint at this point, but we do think that's where more dollars should be flowing, as it does represent better value than your typical direct lending right now, in our opinion. Also, as we step forward and look at the market outlook, we've already discussed, or it has already been mentioned, the potential volatility going forward. Asset-based lending, one of the areas that we do like looking forward and is less crowded, it tends to offer better recession resistance with lower default loss rates. So we think there is an opportunity here to invest in both better relative value for return, but also better risk mitigation within portfolios. So with that, I'll turn over and talk about Vintage 2. We are on track to begin the launch of Vintage 2, likely in April of this year, and have been in discussions with all of the authorities with respect to commitments into that. And we do plan to be ready very shortly for that. We've worked on a model portfolio to put together and what that portfolio is going to look like. I do think there's an opportunity from a returns perspective to continue to match the successful thus far results of Vintage 1. While nothing in here is fully baked, I do think you will get a balance of exposure across both sides of the Atlantic. And one of the things that we're committing to going forward is we will continue to expand the impact portion of the portfolio, as we're seeing more and more strategies in this space that offer compelling returns that can be competitive with the broader market within private credit. And we will also continue to look to expand the local investing portion of the portfolio in partnership with Pluto, but also in partnership with potentially other providers as we continue to invest over the course of the 2-year commitment period of this portfolio. And we will utilize a good bit of that 2-year commitment period, taking account of we do want to get some exposure initially, but also we want to be able to take advantage of opportunities as they're presented and macro environments change throughout the course of the investment period of this portfolio. Finally, I do want to highlight that we do have a nice pipeline with respect to sustainable investing. As I've already mentioned, there are a number of strategies coming out. They are competitive with what's going on in the broader market. And as we think about impact investing, it is broader than just simply the environment, but it can also be social impact, whether it's in the medical community and financing, further health advances, social and affordable housing, as well as, of course, the clean energy and net zero goals that the authorities have. How are we going to do this going forward? Finally, we will, as I mentioned, emphasize more impact strategies within the portfolio and likely take that up in weight. Net zero and managers' commitment to net zero will be a component of our evaluation and whether or not they're going to continue to advance in that respect. And then I think in many respects, most importantly, it's in driving further transparency within portfolios. Private markets are often less transparent. There's certainly less data that exists in private markets, but that is changing. And we are pushing the underlying managers within the portfolios to provide more data and transparency so that we can measure. And once we can measure, then we can discuss how we make further improvements along those lines. With that, I'll go back to questions.
Are there any questions for Keith Baker? Doesn't look like it. And I now ask Adrian Quinn, do you want to come in or?
No further comments, Chair. Thank you.
Would someone please move that we note the report? Yes, it's moved and seconded. Will members please indicate by raising their hand that they're in favour? I think it's unanimous. The report is noted. We'll now move on to agenda item 11. LGBS Fit for the Future, WPFP Submission to Government, page 187 of the agenda pack. Jeff Dong of Swansea Council now present the submission to Government report.
Thank you, Chairman. The foundations of the document you've got before you, item 11, today's agenda, lies back in 2017 with the establishment of the current Wales Pension Partnership as a fully representative, inclusive and collaborative inter-authority arrangement which sought to harness the economies of scale and improve investment outcomes for the founder 8 Welsh LGPS. The model chosen at that time did not align with others, but on all objective measures, it has been a resounding success on a comparative basis. Some of those successes are outlined on page 196 of your pack, and in summary, some of them are, we've pooled over 70% of assets, we have robust governance and highly aligned collaboration between the administering authorities in Wales. We've delivered fee savings of up to £40 million in total. We have dedicated pooled investment vehicles, establishing a range of 10 multi-manager listed asset sub-funds to meet the investment strategy needs of the administering authorities. And we've recently established private market funds in private debt, infrastructure, private equity, real estate. And also, for note, we've also managed to deploy capital locally in Wales and the UK in renewable energy infrastructure, affordable housing, and also latterly battery storage power, and currently undertaking and finalising due diligence on natural capital. As previously mentioned by Mr. Anthony Parnell, the government launched its LGPS Fit for the Future consultation on November the 14th. This consultation outlined a stark choice for the WPP in order to comply with the government requirements, either to merge with another pool or ambitiously set out a business case to establish its own standalone FCA regulated investment management company, which would allow it to continue delivering the outcomes its founding administering authorities want for their employers and members. The compilation of the business case you see before you is wholly symbolic of the success of the collaborative and collegiate working nature of the WPP, in that although I had the privilege to lead the business case workstream, the content you see before you is largely a function of the output of all the other work streams that were created at the inception of Project Snowden. And those work streams are the business case work stream, the FCA application work stream, the IMCO build work stream, the legacy assets work stream, and governance and comms work streams. And these have all been led and input and staffed by and supported by officers and elected members of the 8 underlying administering authorities. But I also want to give thanks and recognise that we've also been supported and greatly assisted by existing core strategic partners, namely Russell Investments, Hammonds Robertson, Waystone and Burgess Salmon in compiling this business case. It's really been a team effort to get the submission together in the challenging timescale laid down by government. But I'd also like to give a special mention for the exceptional leadership and direction given by the host authorities Section 151 Officer Chris Moore in mobilising and chairing the weekly project steering groups, galvanising the group and maintaining the momentum required to deliver this submission against a very challenging government timescale. The submission, quite simply, makes the case that the formation of WPP IMCO presents a once-in-a-generation opportunity to create a standalone LGPS investment management company for the Welsh LGPS, for the benefit of all the stakeholders of the underlying 22 local authorities in Wales, 382 employers and 412,000 members. Not only can the WPP continue to invest for and safeguard the LGPS pensions of its members, it shall also continue to have the chance in its role in investing locally throughout Wales, the rest of the UK, working with councils, corporate joint committees, UK government, Development Bank of Wales, the British Business Bank, promoting economic growth, providing employment, safeguarding clean energy, and enhancing the wider infrastructure of the country for the benefit of the people of Wales, but also with an opportunity, a unique opportunity, to establish a serious centre of excellence in LGPS investment management in the country, creating valuable career opportunities whilst enhancing the financial services sector in Wales. And I would say this ambition is wholly appropriate for a mature, devolved nation such as Wales, and from a practical perspective, continuing as a standalone pool for Wales enables us to comply with regulatory obligations around the Welsh Language Act and the Future Generations of Wales Act, and the quite distinct audit regime present in Wales. Also, by not merging with another pool, there would be no dilution of WPP's voice in governance as a shareholder or client compared to the suggestive alternative of being merged with another pool. This could limit our ability to direct local investment to communities in Wales, for example. A merger would also require partner funds to undertake an FCA authorization process and asset transition. This would take several years, diverting resources from delivery without obvious compensating benefits. These arguments we make are largely qualitative, but the business case also identifies the very material transition costs estimated to be in the region of £50 million if we were forced to merge with another pool. Admittedly, also, the business case is clear that the target operation model identifies we do incur more costs than our current model. And these are highlighted on page 217. But remaining as we are is not an option. So we feel this is a price worth paying to preserve the WPP's sovereignty as a standalone pool. I know that the JGC and elected members have been fully consulted and briefed throughout the whole compilation process of the business case and have provided valuable input into its content. And officers of the steering group have met regularly with government civil servants to present progress updates, which I'm pleased to say have been positively received. However, as noted by Andrew Johnson, we still await formal confirmation and response to the consultation. In short, the thesis behind the business case of our build model is that we want to build on the success of the WPP to date, as previously outlined. And that success was largely achieved with our strategic partners by harnessing their skills and expertise and experience that they bring to the table. So the proposal you see before you is largely an evolution of the current model and not starting with a blank sheet of paper. And this proposal ensures that we'll get off to a flying start at the inception of the IMCO in March 2026. As the business case explains, we see it as a development of our current model and in simple terms seeks to place the regulatory FCA wrapper of compliance around the services and functions that we currently have and to be augmented by the additional requirements required as set out in the consultation. Chairman, I don't intend to go through the document in detail, but I would like to draw your attention to certain sections of the business case. Section 4 of the business case, starting on page 205, and quite neatly on page 206 in an illustration, highlights our intentions for what the new investment management company will look like. And this is largely the product of the IMCO work stream led by Alex Bull of Torfaen. And that diagram you can see there contains some familiar names. The strategic partners that we have currently working with us. We want to take them forward into the new model that we propose. And arguably, this is the logical next step in the development of WPP. In the rest of section 4, we can see the services provided and how they will be delivered by the new IMCO. And importantly, in section 4.5, on page 211 of your pack, we've identified the required senior management functions that are required for an FCA application and what they may look like. Section 4146 on page 212 outlines the governance arrangements for the new IMCO, and this will be of particular interest to elected members in that you can see it's distinctly different to the model that's adopted now. Each of the administering authorities shall be a full shareholder in the new investment management company, and JGC members shall have a full role in the shareholder board that is proposed. But importantly, going forwards, that shall not be a decision-making board. Decision-making powers now reside fully with the newly formed IMCO board, where shareholders should have and shall remain to have representation, but not in a majority presence. The details of how and what shall be reserved matters shall be set out in a comprehensive shareholder agreement. Then we move on to implementation and how we're going to implement our plan. And largely the content of this section of the report is a result of the work stream led by Anthony Parnell in mobilising our application to the FCA. Anthony has already had a number of meetings with the FCA, and they've been put on notice to receive our application in due course. However, as previously mentioned, that application is dependent on us providing robust assurance to the FCA that we have the appropriate senior managers in place in the SMF roles, and these are identified on page 213. And then you see underlying those SMF roles on page 215, the whole raft of IMCO personnel that we'll require once the IMCO is established. As I say, the theme of the business case is leveraging the relationships that we have currently with our strategic partners, and section 515, which outlines how we're going to address our technology requirements on day one of the IMCO, and that sets out how we intend to beg, steal, and borrow from our strategic partners all the key IT and technology that we require from the off. Importantly, then at section 6, we highlight the implementation plan. That the government is very keen and acutely interested in how we're going to meet their March 2026 deadline. And within section 6 of the report, we've identified on page 218 a critical path of milestones. This work stream was led, the engagement and COB's work stream was led by Tracy Williams, aided by Chris Moore, and this is a critical item within the business case in that identified at point 63 is the administering authority approvals that are required to enable us to move forward with our proposals as 8 separate administering authorities, but also then to get the appropriate governance sign off collectively to establish the new IMCO. So if there's one ask that perhaps officers have of members today, is to go back to your respective admin authorities and signpost that this report is coming and advocate and endorse the proposals that will subsequently arrive on your desks in due course. There are risks in this critical path as highlighted on page 218. And as Andrew Johnson indicated earlier on in his presentation, we do not have formal confirmation from the government that we can proceed, and that uncertainty is highlighted in that critical path that you can see on page 218. And then at 6.5 of the report, we have the very important section outlining how we're going to plan the transition of legacy assets. This work stream was led by Phil Latham and Yvonne Keach, and the government were very clear in their expectation that 100% of assets would be under pool management by March 2026. However, noting all the legacy assets that admin authorities have outstanding, it is quite clearly a complicated and complex task. However, the work stream kicked off by Phil and Yvonne sets out, how we're going to sensibly tackle the management of those assets post IMCO. And then on section 7 of the report, we again circle back to how we think our business case meets the government's criteria of benefits of scale, resilience and value for money. And then importantly, at section 8, we set out our longer term aspirations for the IMCO, what we want to do beyond those first couple of years of establishment, i.e. build in-house management capability, build in-house investment advisory capability. Those were explicit asks within the consultation, and we felt it important to address those asks of us within the business case. Obviously I'm biased, but I do think the submission makes a robust business case on why and how WPP can establish itself as a standalone FCA regulated IMCO, which will continue to deliver the investment outcomes and objectives desired by its shareholder funds. And we're also confident that we can do it within the required timelines, whilst also meeting the government requirements. As I say, I really do believe that it's a once in a generation opportunity for us all to create something quite special in the WPP IMCO for all the stakeholders in Wales, and the recommendation, Chairman, is on page 187. I'm happy to take questions.
Any questions, suggestions? Well, I'd like to firstly thank Jeff. He's put a lot of effort into making this report, and his presentation today was one of the best we've had for a while. So I'm speaking on behalf of all the members there, I think. Nathan.
Yes, thank you, Chair. I'd just like to echo Elwyn's comments to Jeff, but also to the rest of the officers, because obviously this is a phenomenal amount of work that's literally came from nowhere 6 months ago. So you've done a very good job, and actually I think all the chairs would also reflect how responsive you've been through this process. I do have a question, I might have missed it, when it comes to the how are we proposing to find board? Obviously, the governance arrangements will be changing. Obviously, we need to find a board for the company, and I might have missed it in there. What is the suggestion, or how are we suggesting that we build out the board for the new company? Because obviously, I think that's quite critical as we're handing over all the decision-making responsibilities over to this new group of hopefully men and women. How are we going to find them?
Councillor Yule, that is contained and is to be determined within the IMCO build and FCA application work streams subsequently. It is a vexed question. It's, what comes first, the chicken or the egg, in terms of, establishing a shadow board first to make those appointments and decisions, or vice versa. So it is something that the steering group and the different work streams are wrestling with at the moment, but it's a valid question, and a question that is yet to be resolved, I would suggest.
Chair, can I come in with a little bit more info there, because I've been a party to discussions with the monitoring officers recently, where there's an ongoing challenge as to how we navigate through getting the constituent authorities to move forward. But my sort of understanding is that the likely sort of structure will be there should be a shareholders board which will have representation of effectively the 8 pool funds on there. In all probability, the chairs of the 8 funds, and then below that you'll have the main company board, where there'll be representation of the funds there, but only a minimal representation with the executive committee and possibly some non-executive directors as well. So that is being sort of worked through at the moment, and it's been worked through partly through this discussion with the monitoring officers, where we're trying to navigate through what authority we got and how far we can go without coming back with this constituent authorities report. Burgess are helping with that, but also that dialogue is also taking place in the IMCO work stream, which is looking at more the detail of it. So it's coming through slowly, but there's a lot of work and a lot of detail to go through, and there's assistance of Steve, our monitoring officer at the moment, and the Powys monitoring officer, Clive Pinney, at the moment, who's working with Burgess on that area. Diolch.
Are there any other questions? No. Oh, so someone please move that we note the report. Yes, moved and seconded. Will members please indicate by raising their hand that they are in favour? Unanimous? Yes.
Yeah.
Now then, I'd like to thank, the report is approved. I'd like to thank representatives of Waystone and Russell for their contribution and ask them to kindly leave the meeting. Before we move to item 12, do we want a 10-minute comfort break? Is it? Do you? Yeah, okay.
Should we adjourn in for 10 minutes?
We'll adjourn until 5:12 then.